Welcome back. You're still tuned into Mid-Cap Radar and we are in the middle of earnings season. So let's get some conversations with respect to earnings going. GTPL Hathway is the stock on our radar. The company saw a revenue growth of 17% on a YOY basis. However, the EBITDA margins, that is down 75 basis points on a YOY basis. We have Piyush Pankaj, the CAT business head and chief strategy officer of the company, joining us now to understand what led to the fall in margins this time around and what is the outlook going forward for the company. Mr. Piyush, good afternoon. Thank you so much for joining us and discussing the earnings gone by. I wanted to understand the outlook on margins. There has been a decline on a YOY and on a quarter-on-quarter basis, which is below your expectations as well. You had indicated it could be 17 to 18%. It is around those 14% levels. What led to the decline and what is the outlook for FY25 in terms of margins? I think...
Mr. Piyush, are you on mute?
Yeah, I think you're on mute.
Am I audible?
Yes, you are. Please go ahead.
Sorry. Yeah, so good afternoon. Thank you for giving this opportunity. Yes, you're right that I have given that somewhere 17 to 18% the margin is going to be there, but it has come down to around 15.5% on the overall. This is due to some of the non-operating revenues, which is the activation revenue and one-time other income, which has come down. If both were together, we would have 17.5%. It has come down by around 35 crores if you take the both together. But yes, we are hopeful that we are going to come back in FY25 and again we'll achieve between 18 to 20% of the margin on the total business. But yes, I'm giving the operating margin also, which is the range of 23 to 24%, which we are maintaining from last 5 years. This year also, we are at 24% in the operating margin, which is still continuing, and we are hopeful that that will increase with the time in the FY25.
I just didn't get the operating margin number. There was some sound. Can you repeat that for us? And by operating margins, do you mean it at the gross margin level?
No, operating margin is when you are doing the net of the broadcaster's payout and you're taking out the one-time income and expenses. So it's more of what you are doing in the operation side. Mainly after taking out all one-time revenue and expenses together. And you are doing, if we are doing historically at 25 to 26%, this year we are did it at 24%. We are hopeful that will bounce back to 25 to 26% next year.
So with the margins bouncing back, like you mentioned, what we've actually seen is that profits been going down for the last couple of quarters. Historically, you've done a run rate of in the range between 40 to 50 crore. So when can we revert back to those levels? FY25, what would be your target in terms of bottom line?
See, this year, the profit side, if you see, we have gone down by around 5 to 6 crores. From 120 crores, it has gone down to around 110 crores, 112 crores. We are hopeful that we're going to bounce back. This year, the cost has a bit higher. As you know, the NTO3 has come and the broadcaster's cost and everything has gone up in this year. We have taken our revenue also up on that level, but still we have to do more on those sides. We are hopeful that FY25, again, you will see, we are giving consistent performance, if you see, throughout. It's in the range of 100 to 120 crores, the 125 crores, the profit. And we are hopeful that this will improve from here onwards.
Okay, so you are saying 100 to 125 crore rupees has been the profit range and you are going to improve with FY25 from those levels.
That's right. That's right. If you see from the last 3 years on the annual basis, we are at that range on the consolidated results.
Okay, take that point. Let's talk about the cable business, TV. That one has grown at a healthy pace. But again, the margins are here under pressure. Is it because of the same reason that you explained earlier? And what is the guidance in terms of subscription revenues and also margin guidance for this particular business?
See, in the entertainment side, if you see the technology developments and all, it is putting the pressure on the business and especially on the margin side as the advent of OTT and other mediums in the market. That is impacting the whole situation on the ground. Yes, we are able to increase prices, but the constant price increase in the content cost on the input cost is one of the things which is the challenge which we are facing in the whole industry is facing that issue. But yes, uh, through the consolidation of industry, because in the cable it's still around 40 million subscriber bases with the smaller MSOs. We are consolidating industry very fast, and we are growing on that level. As we grow, we can increase the ARPU in the market, which is our intent, and match the margins and everyone in the coming years. So that's on the intent we are working. Yes, we have added around 600K subscriber base in this year. Next year also, the plan is that around 1 million net subscriber base to be added, and at a good ARPU. So that's the way we are working towards, and we want to maintain. And somewhere we have to transform the company. We have to start providing more of the services on our angle. We believe that we are like a pipe which is going to the home, and we have started providing cable TV, broadband. We have just started OTT. We have to provide gaming. We have to provide TV everywhere. We have to provide other services with going forward layering of the services so that we can increase the ARPU, or you can say the takeaway from the home, and provide
Right, sir.
all the products which is required at the home level, at the consumer.
Yeah. One more question, if I could interrupt you there. When you're talking about ARPU, ARPU's been quite steady over the last couple of quarters. You've, at least for the time being, you seem to have ruled out raising prices. So can you give us a sense, will most of the revenue growth come in largely from adding subscribers? You've also indicated that you expect some consolidation in the market. So are you on the lookout? Are you on the prowl for going ahead and adding a few MSOs?
Yeah. So last year we did the one merger, or you can say one acquisition of the Metrocast, which is of 500,000 subscriber base. Same way, we are looking forward for more acquisitions in the market of the smaller MSOs. That is one. Second, on the ARPU side, we have to play in such a way that the consumer should not get threatened, and they should take those as per the market. They can absorb those increases. So that's the way, and that will come with as you do the expansion, as you go away with the competition, you have a dominant market share in the home. So that's what we are trying to do. We are number one MSOs, and we are far away. You can say far ahead with others MSOs. So that's what we are looking forward. That we will increase the gap, become more reliable, and which will help us in increasing the volume and value.
So you've identified any targets? Last year you've had one successful acquisition. Any targets you've identified for FY25? And what will be the likely size of any acquisition that you do?
Yeah, targets are in the pipeline. I will say it is from 200K to 700K, 800K subscriber base. There are pipeline which is there. Last year also we did smaller acquisitions also. It's like somewhere the smaller MSOs of 75K, 100K we did it, and through that we have increased to 600K subscriber base. This year also the plan is that already deals are going on in the market. We'll see that once you conclude that, we'll announce that.
And we'll touch base with you when that happens for sure. Mr. Piyush, I also wanted to understand, you did indicate that you are looking at a number of factors when it comes to price increases. Do you think in the near term, in this calendar year, there is a price hike which is on the annual, considering that you are saying you're number one in your own geography or your own market?
Yeah, we are planning that, and we will do it very shortly. Some of the price increase we will do in our strategic markets where we are dominant, and so we are going to do that. It's price increase and ARPU increase in the market.
Okay, give us a sense of the capex outlay you have for FY25. How will this be divided between the cable and the broadband business? Expected asset turn, and how do you expect to fund any capex plans that you have?
Yeah, so we did around 396 crore of capex this year, where 200 crore has gone into the cable business and 196 crore has gone into the broadband business. That's the outlay. Every time we are giving that, we are going to do around 400 to 450 crores of capex in the thing. The main it's happening through the internal accruals, as you are seeing that we are making around 511 crore of this EBITDA this year. Last year it was 516 crore. So around 500 crores of cash which is coming into the company. We are doing it through internal accruals, and we are not. So that's the way we are funding our growth.
Okay, all right. Thank you so much, Mr. Pankaj, for joining us today and giving us all those details. So that's the word coming in from GTPL Hathway, the reason for the decline in EBITDA margins. But going forward, they expect margins to be between that 17 to 18% mark that they had guided for, and decent subscriber addition as well. The stock did see a spike from the lows, but again, it has slipped into the red. And that has been the case for the market as well, because mid-cap index that recovered from the lows is in the green right now, up around 50 odd points. And that has been the story, right? The volatility that we are seeing in the markets today. But we'll slip into a break now. As we do that, we have an announcement to share with you all. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she'll be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There's lots to learn and lots to do. Whether you're in your 20s, 30s, or even 40s, this live webinar is for you. We have limited seats, so do not miss this chance. Register now. Scan the QR code to register or log on to cnbctv18.com, and we'll see you on 11th May.